Anyway, so we are here on the chart, and so before I proceed to this, the technical analysis. Okay, so if you want to learn the options trading, okay, what are options, what are option Greeks, okay, how do options work, and what are options trading strategies, okay, how do technical indicators work, what technical indicators should be used. So I have given the links to these programs, okay, in the description of the video, so you can take a look. Now the technical analysis. So first I'm going to do the weekly analysis. Okay, means on this the weekly chart, the technical analysis of S&P 500 on the weekly chart. So this is the weekly chart, and these are the weekly candles. Okay, not hourly candles, not daily candles. These are the weekly candles. Now, if you look into this, the last candle. Okay, so in this week, market came down heavily, very heavily, very heavily. Okay, but on Friday, October 1st, okay, in the second half, there was a rebound in the market because market hit this critical. So as I'm telling you for last couple of weeks, okay, months, that look, these support and resistances. Okay, they are very critical. Means whenever market hits these support and resistances, then something happens in the market. Okay, means market is not comfortable after hitting these support and resistances. So the market hit this, and then there was a bounce back. So I told you that whenever market hit this, means in my last video I told you that whenever market hits this particular support at 4290, okay, then market will rebound, then the market will rebound. So there was a rebound in the market. Anyway, so this is a bearish candle, and this candle, okay, it closed below this support. This was the support. Okay, so let me first tell you the support and resistances. Okay, so we have this critical resistance here at 4527, 4527, or 25, you can say 4525. This is very critical resistance here. Okay, then we have a very good support here at 4395, 4395. Okay, means this was the support earlier. I mean last week this was the support 4395, but now it is going to act as resistance because market has closed below this support. So it is now going to act as resistance. Then there is a very good support here at 4290, 4290. Okay, then we have very heavy support at 4185, 4185. So market is at 4357. Market is not expected to move beyond this, but still we have very critical support, very critical support at 4033 or 4035. This is very critical support. Okay, means whenever like this month or next month, whenever market comes down, okay, it will come down. So whenever market comes down and hit 4035, okay, then you will see very good or very heavy rebound in the market. Means market will try to build a lower high. Okay, so these are the support and resistances here for S&P 500 index. Okay, so we were talking about this candle. So this is a bearish candle. It closed below this support, which is now going to act as resistance. 4395 is now going to act as resistance. Okay, means whenever market rebounds in the coming week, then it will find very heavy resistance here at 4395. And also this is also going to this is also a confluence zone for the market. Okay, this is also a confluence zone. So which is why it is now going to act as very heavy resistance, not just resistance, but as very heavy resistance. And in my last videos, okay, I'm telling you that, like the support and resistances are not just one price. Okay, they are the zones where and in these zones the market oscillates. So these zones, they have the bottom, okay, and this means they have the lower value and they have the higher value, but this is the mean value. For example, in this case 4290, market rebound from 4290. Okay, because this 4290 is a mean value of this zone. Okay, it is the mean value of the zone, and the upper value and the lower value, so you can simply plus minus 25 plus minus 30, that's it, and you will find the upper and lower value. So market came down, market hit the mean value, then market rebound, and market closed above the higher value of this support. Okay, so which is an indication that there is still some bullish momentum left in the market. It is weak, it is very weak, but still there is some bullish momentum left in the market. Okay, the reason is, okay, one more thing, if you see that these moving averages, these three moving averages, okay, so it closed below only one. Okay, this is the mean of or this is the SMA of the Bollinger Band. It closed only below the SMA of the Bollinger Bands, but above the EMA and the WMA. So this is a point of concern here. This is the weekly chart, and this is the point of concern here, because but yes, there is one good news, and the good news is that this candle, okay, this was the first time in 1 year after October, or sorry, after November 3rd or October 28th 2020, means after 1 year, this was the first time market came down heavily, and not just heavily, but market actually closed below the SMA. Okay, so this is the good news, like because the bullish momentum is the bullish movement is about to over, okay, as it looks like here. Anyways, let's do the technical analysis here. So this candle, okay, this bearish candle, very heavy bearish candle, it is an indication that there is a bearish movement in the market. Okay, now technical analysis. So these moving averages, like I told you, that the market closed above these two moving averages, WMA and EMA, but closed below the SMA, and because of which, okay, it is still not clear, means it is not still very clear that the market is actually bearish, because for the market to be bearish, to be to be uh, to be fully bearish, okay, the market needs to close below all of these three moving averages, then only we will say comfortably that yes, the market is bearish. But as of now, you can say that the market is partially bearish on this the weekly chart. And if we talk about some other technical indicators here, remember this is the weekly chart. Okay, these are the weekly candles. So technical analysis, yeah. So other technical indicators, we have the stock RSI. So stock RSI, okay, the lower the K channel of the stock RSI is less than the D channel, which means it is bearish, and here it is heavily bearish. Okay, because the K channel is less than 25. Okay. And the MACD is bearish. MACD is again heavily bearish. Both K channel and D channel, okay, they are bearish, which means yes, there are very heavy bearish sentiments in the market. And momentum is more than 70. So this is a good news for the bears, that the market is that there is a this very heavy momentum, is not very heavy, but there is a heavy momentum building up in favor of bears. Okay, so through all of the technical indicators. On the weekly chart, okay, market is means you can say like market is bearish and market is partially bullish. So I will say market is partially bearish. Okay, means there is a very weak bull trend, and it is partially bearish, but it is not fully bearish. The market is not fully bearish on the weekly chart. Okay, so this thing will be more clear on the daily chart. So let's move on to the daily chart to clear the trend, like what is going to happen, and what should be your trade strategy for the coming week. Okay, we are here on the daily chart. Okay, this is the daily chart, and on this daily chart, sorry, on this daily chart, these are the daily candles, not hourly or weekly candles. These are the daily candles. Okay. So market was coming down. Okay, this was good on this day, that was October 1st, Friday. Okay, in the second half there was a rebound in the market, because market hit this this support. Okay, this was very heavy support, as I mentioned earlier in last couple of videos also. So this was very heavy support. So market, okay, there was a rebound in the market, and market means the S&P 500 index on the daily basis, it closed above this moving average, above this moving average. Okay, so this is not a good indication for the bears, because the candle was supposed to close below this moving average. Currently it is at 4,333. Okay, but the market managed to close above this moving average. Anyways, there are still these 5 moving averages. Okay, but this candle is bullish in nature. Okay, which means that market is trying to rebound, but this rebound is limited. Okay, this rebound is not like that the market is going to move up very heavily. Okay, but this rebound is limited by these moving averages. Okay, and also this resistance, okay, which was acting as support. So if you see like this 1 2 3 4, okay, these 4 candles, okay, these 4 candles, they closed below this particular resistance. Okay, which means this is now going to act as very heavy resistance. Okay, and also on the weekly chart I told you that it is also a very heavy confluence zone, very heavy confluence zone. Okay, so it is now going to act as very heavy resistance. So an opportunity will be created in the market whenever you see that the market is moving up. Okay, and the market try to hit this moving average, which is currently at 4,390, and our resistance is at around 4,396. So you can say like 4,400. Sorry, it is at 4,400. Okay, so this rebound will be seen. So market will try to hit 4,400 thereafter, and if it crosses 4,400, then it will try to hit these moving averages. Okay, and maximum it can hit 4,433 or 4,435. Okay, so in this direction 4,435. Okay, 4,435 in this direction means if market manages to close above like Monday, if it manages to close above 4,400, or if it manages to cross above 4,400, then it will try to hit 4,435. Okay, and then it may further move up because of this, the confluence zone, a small confluence zone created by the market. Okay, and this confluence zone is at 4,471, so 4,470. Okay, so this is the movement of the this is the expected movement of the market in this in the bull direction. Okay, but now in the bear direction, okay, whenever the market comes down, like if there will be a gap up opening, it may try to move up. Okay, but then further it will means thereafter it will come down. Whenever it comes down, okay, it will find support here on this moving average, and this is around 4,333. So you can say like 4,330. Okay, so market will find a very good support at 4,330, and thereafter it will come down to the same 4,290. 4,290. Okay, and thereafter, as I told you on the weekly chart, okay, we have very good support at 4,185. So 4,185. Okay, so these are the levels, means market is expected to hit all of these levels. Okay, whenever it moves in either direction. Okay, if it comes down, then it will hit these levels, and if it moves up, then it will hit these levels. Okay. One more thing that you need to see. Okay, here if you see this candle, this last candle, okay, it manages to close into Ichimoku, means above the lower boundary of the Ichimoku. Okay, so again, a point of concern, but not much, because there are still 5 of these moving averages. Okay, anyway, so let's do the technical analysis here on the daily chart. Okay, so moving averages we have already discussed, the Ichimoku we have already discussed, and if I talk about this okay, the other technical indicators. So we have stock RSI. Stock RSI is still bearish. K channel is less than D channel, and both are less than 25. Okay. But so if you see the like it is trying to move up, but it is not a point of concern, because if the market comes down, or if the market remains like stagnant here, then it will change, and the values will come down. MACD is bearish, fully bearish. MACD is supporting stock RSI. And momentum, yes, there is very heavy momentum supporting bears. Okay, a divergence is okay. So overall, the sentiments of the market, means overall the technical analysis is saying that the market is bearish. On the daily chart, it is clear that the market is bearish. Okay, means it is not it is not bullish, it is not weak bullish, but it is bearish. Okay, but yes, the market, means the S&P 500 index, it is not fully bearish. Remember, it is not fully bearish, it is bearish. There is a difference. Fully bearish means there is a guarantee that the market will come down, and it will come down heavily. Bearish means that the market may try to move up a bit, and then it may remains there, or stagnant there, or it may even cross. Okay, but there are chances that the market will come down. That is bearish. Okay, so my suggestion is, or what I say, okay, so we are clear that the market is bearish. Okay, this thing is confirmed that the market is bearish. So what I suggest is that whenever the market hits these levels, okay, these levels, whenever the market hits these levels, means it moves up, and if it hits these levels, then you should sell. Okay, or means if you're trading in stocks, then sell, or if you're trading in futures, then sell. Okay, but if you're trading in options, okay, so you have seen like S&P 500 index, it gave you 1000% within 1 hour. So if you're trading in options, then okay, not here, sorry, in that case I will say like go for puts. Okay, so you should go for puts, means you should buy puts, not sell put, but buy puts. So puts sorry, so you should buy put option of S&P 500 index, and I would recommend you to go for again 4450. Yes, that is good. 4450 means if the market comes down heavily, okay, then you will not be able to make like 1000%, but yes, you will be able to make 200%, 300%, 400%. Okay, so that is enough. Okay, but if the market backfires, okay, but if you see a very heavy rebound in the market, in that case your loss will be limited to 10% or 20%. That's it. Okay, and also I would say, like, if you are an aggressive trader, then go for the weekly puts, and if you do not take very heavy risk, in that case go for the monthly options. Okay, means the monthly expiry. So 4450. Okay, so this is my advice. Should you wish to participate in my options trading programs, okay, options trading strategies, okay, or if you want to learn options, then I have given the links to these programs in the description of the video. You can take a look. Okay guys, so this was my technical analysis for S&P 500 index for the week commencing from October 4th 2021.